Hello folks, welcome to this video. In this video I'm going to share a very simple strategy that anyone can start using in no time. In fact, you can start using it immediately after you watch this video. The reason I'm making this video is because today I received a mail from one of my subscribers, and he mentioned that he was kind of frustrated with all the losing trades he is having, and the reason for that, he said, is that he is not able to implement any system correctly, and he was looking for a very simple strategy that he can use and at least start seeing some kind of profits in the forex market. So I thought, just like him, there may be other subscribers, and there may be some other subscribers on my list who might be looking for some simple way, and I just thought of making this video, which is with this strategy, which is kind of very simple. It doesn't use any fancy indicators. It doesn't use more than 2 indicators, in fact. And and if you're struggling in having any profitable trades, then you're welcome to use this strategy. It's nothing fancy, once again, and it's one of the simplest of strategies, but is extremely effective. This is a 1 hour Euro USD chart, and it's drawn on candlesticks. The blue bars are the bullish candles and the red bars are the bearish candles. Now if you look at this chart, the currency pair makes a high, then a low, then makes another high, another low, and some other high and lows. But along with this, you may see that in between there are moments when the currency pair makes a high, tries to make a low, then makes another, then goes to make another high, or at least it attempts to make another high but could not, and then it reverses. This kind of formation is called a double top. Similarly, this kind of formation is called a double bottom, where it makes a high, it makes a low, then reverses to make a high but couldn't, then tries to break this level again but couldn't, and then reverses. This is called a double bottom. This is called a double. Once you do that, then what I want you to do is place a trade immediately. The next candle is a reversal candle. For example, now this is a double top, this is a top, here's another top. This is a kind of doji formation, which kind of indicates that the market is not having any upward strength. Then it reverses. So if you look here, this is a bearish candle. It kind of indicates the market is not able to break this level, so it's kind of now reversing. So I want you to place the trade immediately after the close of this candle. So once you are, then after that, if you see, the trade goes to this low. Now one important thing that you must keep in mind when placing the trade is that this reversal candle should close at least 50% below the body of this candle. To give a good example, let me show you here. This is a top, this is another top, but the next reversal candle penetrates at least 50% below the body of this candle. If this bearish candle would have closed, let's say something here, which is above the half of the previous bullish candle, then that's not a good signal to open a trade. I want the next candle to close at least 50% below this candle, the blue candle. Okay, so now we have opened a trade. So the next thing is to make sure that we get out of the trade as soon as we have secured certain amount of profit. So here are the simple money management rules for such kind of trades. It's nothing simple as possible. So what you are going to do is, as soon as your profit now, if you're one thing I forgot to mention is, I want you to use this strategy only on a 1 hour time frame or a 30-minute chart. So if you're trading on 1 hour chart, these are the 2 things you have to do. The first thing is, as soon as your profit reaches 30 pips, I want you to move your stop loss to the end. So in this trade, if your trade would have opened here, which is 1.4955, as soon as you reach 35, 1.4935, sorry 2.5, I wanted your entry point, your stop loss to move to the entry point. So from this moment onwards, your trade can never end in a loss. The next thing I want you to do is, as soon as your profit reaches 60 pips, you can close the trade. As soon as you reach 60 pips in profit, close the trade. So you are ending with 60 pips profit. Now this is a double top. We would have entered the market here. As soon as the market reaches here, we would have moved our stop loss to the entry point. But from here the market reversed and we would have got it at zero profit. Same in the next case, this is the top, this is another top, double top. We would have entered our trade here. At this point we would have been 30 pips in profit. The market reverses, it takes our it hits our stop loss, which is at the entry point. We end up with zero profits. No problem. The next case, this is also a double top. For example, this is a top. The market tried to break this top, it couldn't, and we would have opened our trade here. But look at this particular case, the market kept falling and we would have closed our trade at 60 pips profit. So we had 3 trades, 2 ended in zero profit and the third ended in 60 pips. That's a good value. Now if you look here, this is a top, but this is not a top which penetrated the high of this particular candle. So this is not a double top, it's too far from the high of this this setup. But this one is, this is a high, this is another high. The next candle is bearish candle. It closes, I mean the size of the body is close to the size of the previous blue candle, and then the market reversed. When the market reaches here, you would have made 30 pips profit. Our stop loss would have moved from here to here, then it would have fallen again, and this is where we would have hit 60 pips in profit and would have got out of the trade. Now this is a 30-minute chart, and here also we are going to do the same thing as what we discussed for the 60-minute chart. You identify a good double bottom or double top. For example, now this is a bottom, this is a double bottom. We would have entered the trade here. By this point, we would have been 15 pips profit. Okay, on 30-minute chart, what I suggest is, once you reach 15 pips in profit, 1.5, then move the stop loss to the entry point. And once you reach the 30 pips in profit, then you can close the trade. So 60 pips profit on a 60-minute chart and 30 pips profit on a 30-minute chart. So here we would have reached exact 30 pips in profit and we would have closed the trade. The market would have reversed, made another double bottom, the first bottom, the second bottom. We would have entered our trade here at this candle, and we would have closed the trade here with 30 pips profit. Now again, the market continued moving up, and if we would have continued in the trade, we would have ended up making, I think, how many, 75 or 80 pips. But again, the intention here is to have regular profits, even if the amount of profit is limited in number. So this is a very simple strategy. Like I mentioned, there's no fancy indicator. The only indicators you have to use is the candlestick, and the second is, in fact, is now not an indicator. It's a formation which is double top and double bottom. Now one important point that I would like to share with you is that in this particular strategy, there will be a lot of trades. In fact, I think close to 35–40% of trades that will end up in zero profit. It won't be a loss, it won't be a profit. But there will be a lot of trades. Again, I think it will be close to 35–40% which will end in profit. So overall, net, this strategy is going to be profitable. There will be very less losses. There will be significant amount of trades which will end up in zero profit because of the money management principles that we apply. But there will be a lot of trades that will end up in good profits. So overall, this strategy, if you use correctly, can be profitable. So I want you to use it, practice it, give yourself about 1 week or 2 weeks time before you start seeing some good results. Another thing I would suggest you to do is to click on the link below this video to find the details of another system.